Hello there! With the FOMC behind us, let's have a look at post-FOMC market review. And today we're going to have a look at quite a few markets. We're going to look at the general stock market, the S&P 500. We'll have a look at gold as well as energy, crude oil specifically, and we'll have a quick look at Bitcoin. Welcome to myfinanceteacher.org, where our data-driven approach guides every step of our journey towards maximizing profits. Talking about a great source of data for the best uranium reports on the internet, join us now. Continuing to talk about the markets, let's start with the S&P 500. The last time we looked at S&P 500 was all the way back on the 10th or 11th of January when we drew this squiggly line over here. And so far, the markets have followed this squiggly line almost exactly. Before that previous daily cycle low, we saw a bit of a negative divergence on RSI, a bit of a cool down into the daily cycle low, and currently this second ongoing daily cycle is already 26 days long. Usually these cycles last anywhere around 1 to 2 months, somewhere around 1.5 to 2 months. So it's pretty likely that the ongoing short-term daily cycle in S&P 500 perhaps has topped, in which case we probably have several weeks, 3 to 4 to 5 weeks of some downward momentum within the short-term daily cycle. After that, there'll likely be another bounce into the third daily cycle of the ongoing intermediate cycle, followed by a bit of a correction. And while this is probably most likely scenario, it's only one of the possibilities going into the future. And as nobody knows the future, it's important to emphasize your risk management while using data rather than emotions in your investments and trades. Next, let's move on to gold market. Gold is a little tricky with its short-term daily cycle. It's still a bit unclear whether the daily cycle finished over here on the 17th of January, lasting for 35 days, or whether the daily cycle is still ongoing. Hence, there are a couple of scenarios going into the future for gold. One of the scenarios, perhaps a bit more bullish, is based more on the technical picture that the price is giving us, a bit of a consolidation triangle forming. We'll have a look at that in a moment. And the second scenario is based more on cycles and seasonality. So looking at technicals, we see a bit of a triangle over here. Usually triangles are a continuation pattern. Prior to that triangle, gold rallied out of the previous intermediate cycle low. With the triangles being continuation pattern, one possibility here is that we've seen an extremely mild end to this intermediate cycle low over here in the middle of January. And what gold is going to do from here is continue to the previous all-time highs. Of course, there will be consolidations on the way, but generally in this scenario, we expect continuation higher into the intermediate cycle top. However, I don't think this scenario is extremely likely. So let's give it a bit of a dotted line over here rather than a solid black line. For a solid black line, the scenario is that gold has started a new daily rather than a new intermediate cycle, as the decline down into mid-January was very mild. So it's only a new daily cycle for gold. Perhaps there is another 1 or 2 weeks of strength in gold, followed by a decline down into a more discernible intermediate cycle low, perhaps coming close to testing that 200-day moving average within that intermediate cycle low. That's probably going to be somewhere in mid-March. Seasonally, that's a time where gold is usually relatively weak, followed by another push higher into that new intermediate cycle. So those are the two most likely possibilities for gold. Moving on to Bitcoin. Bitcoin has been rallying substantially all into the expectation of these ETFs, and within this significant rally lasting from September into January, we've only seen a very mild, not clearly discernible decline down into this cycle low in the middle of November. Usually, historically, these Bitcoin cycles last for anywhere around a couple of months. And what we see at the moment is a new cycle has formed. It's only been going on for less than a couple of weeks so far. So it's likely going to continue higher, perhaps test that $50,000 on Bitcoin before coming down into that cycle low, giving us a bit of a W formation, double top temporarily before the bull market in cryptocurrencies continues. Alternatively, what we might see is perhaps a bit of a head and shoulders formation We see a bit of a left shoulder in November through December, the head over here in January with ETF announcement and the subsequent decline down into the cycle low, and an ongoing new shoulder with a possible test of that 200-day moving average perhaps over the next several months. After all, over here at the peak of that ETF announcement, Bitcoin was around the 49-50% above the 200-day moving average. And that usually means that a bit of a correction is likely. Here's Bitcoin's previous 42% poke above the 200-day moving average all the way back in April, followed by a bit of a retest of that 200-day moving average. So retests are quite likely, except if Bitcoin is forming its final spike up into that end of the bull market. For example, all through 2021, these extensions above that 200-day moving average were well above 100%, over 130 and into 170% before any sort of correction down into that 200-day moving average took place. That usually happens only into the tops of those bull markets. So while that's our outlook for Bitcoin, remember that this again is one of the most likely scenarios out of multiple possibilities going into the future. Lastly, looking at crude oil, we've been fortunate enough to accumulate crude oil and the related oil producers back at the recent lows together with the members at myfinancesteacher.org, where we were expecting a rally into a new intermediate cycle. So far, crude oil has rallied into this new intermediate cycle, which so far has been going on for 50 days. Over the last few days though, crude oil came close enough to this resistance zone somewhere around $80 to $81 based on several recent tops and lows, and there is a bit of a resistance based on the 50% Fibonacci retracement. Again, that's also just above $80. Hence, it's not unnatural for crude oil to pull back down from that resistance, perhaps test the middle of the Bollinger Bands as well as the 50-day moving average before continuing higher towards that intermediate cycle top. And again, for much more details with a look at market sentiment, seasonality and other data, again, join us at myfinancesteacher.org. Have a thrilling Thursday. Bye bye.